Good afternoon, traders, and welcome to this week's Forex Focus, the show where we look ahead at what could be setting up in the FX markets. A special mention goes out to all of you fathers out there today. Happy Father's Day on this wonderful, beautiful sunny day here in the UK. What we're going to look at this week is two opportunities that are a little bit different to the others that we've been looking at up until now. Usually we're looking at ways to exploit the trend, sort of like taking trend line breaks in the direction of the predominant trend. And whilst there's been some really nice moves over the past couple of weeks, past week, the markets have really started to move there. We haven't had the pullback yet to allow us to be able to take advantage of the trend opportunities that we usually trade. So what we're going to look at today are two opportunities where we may be calling a temporary end to some of these moves, or at least a sort of like a minor correction that we can take advantage of in the opposite direction of the trend. So without further ado, let's jump over to the charts and look at the opportunities that we're talking about. Okay, so the first one is this one here on the Australian New Zealand dollar. Now, as you can see, if we look at it from a 1 hour time frame, you can see that the trend is clearly up. The market is moving up every time it gets an opportunity to break out above a high. It does so with some momentum. So we've had a break up here. The market then went sideways for much of last week before towards the end of last week, then breaking up again. And as you can see there, there's a huge momentum move to the upside. That's also reflected in the 4 hour chart. So we've got this move up here. The market moves sideways for much of the week. And then again, a momentum move to the upside. Now, we're not for a moment saying that this isn't going to continue. It looks at the moment, it looks as if this is quite a strong trend change. We've broken structure on the dailies so far, as you can see here. So the market is making lower lows and lower highs. And at the moment, we've broken structure here with quite some momentum. But what we're looking to do for the very short term, in any case, is take advantage of the market approaching this big weekly level here. So as you can see here on the weekly chart, the market's come up to this level and it used it as sort of like a catalyst to be able to sell off from. And we've got a massive momentum move from the 1.1310 all the way down to 1.0000. So it's like a 1300 pip move right there. Now the market is approaching this level for the first time since then. And the thing that we like about this is that it hasn't sort of been meandering up there. It's been literally week after week after week. It's been moving to the upside, which is great for us, and it hasn't stopped in between. Now, as we all know, the markets aren't really going to go from point A to B, or they rarely do, without stopping in between. And that's what we're looking for here. So we're not going to look for a massive correction to this level. We're just going to look for some sort of a bounce from this level. Maybe sort of like a, not like a 1300 pip bounce all the way down to the lows here. Nothing like that at all. But if we can get some sort of a bounce from that level, if we get the right price action here at the 1.1307, we then look to exploit a move potentially down to about the 1.1063. So it's a very, very tiny reaction that we're looking for here to an extremely big level. Now, I don't think that's too much to ask. Obviously, it may not pan out that way. If the market gets above this level, and this is going to be the key, is the way that the market reacts to this level. So if it gets out above it, okay, and then it does so with momentum and starts to smash off up here, then obviously that trade's not going to be on the table. But what we'll be looking for is the markets get out above this level and then fail to hold above the level and close back below. If it does that, then we'll be looking for a move initially down towards this sort of congestion area here. So if we put that on our charts, we'll be looking for a move somewhere around here. And then we'll assess the trade when it gets down to that level. Hopefully, we'll get an entry which will allow us to have a very, very nice risk-reward trade to get down to that level. Then we don't even really need to entertain any further moves. But of course, we'll see how the market approaches this level if it gets down there. If it's doing it with some momentum, we might move the stop up to break even, take some of the position off and see if we can ride it down towards these lows here. But that's something that we'll have to wait and see. But the key to this is that obviously, we're going to be taking a decent risk-reward trade there. Okay, so the risk-reward on that trade is very, very good. And if you take those trades, which to us sort of gives us about a 60-70% strike rate, but if you can take those trades there with a massive risk-reward, then you're always going to come out ahead of the game. The other opportunity, again, is a similar one, and it's on the pound CAD. So on the weekly charts, the pound CAD came up to this level here at the 1.9574 and sold off from that level all the way down again, about another 1400 pips there, down to the 1.8147. It's now approaching this level again, and the key is the way it's approaching that level. So it's not doing it sort of meandering up there with not very much momentum at all. It's moving up to this level with momentum, and the reason that that's good is it will allow us to really judge the price action when it gets to that level, because with this momentum here, once we get out above this level, we should see the market shoot off to the upside. If we don't get that and the market kind of messes around here, then closes back below the level, that tells us that, at least for the moment, the market doesn't want to go there. And therefore, we will look to exploit an opportunity down towards these sorts of lows here. So not a massive reaction. We're not looking for a big swing there. But obviously, we're looking for sort of like a minor reaction to a very, very big level. And as I said, the key is the way that the market reacts to this level. We like it when the market approaches areas that we think that there's going to be some sort of either a bounce from or a momentum move through. We like it if it approaches those levels with momentum, because then it's very easy to read the market. Because if the momentum dies at that level there, we know that it's not quite right for the breakout, and therefore we wouldn't try to trade the breakout. Instead, we would try and fade the breakouts. Okay? So I hope all of that makes sense to you. As I said, we're not looking for any big trend changes here. We aren't the type of traders that try and stand in front of the train. We always look to trade with the momentum. It just so happens that this week the markets have gone quite a long way. And obviously we're waiting for the pullback. So what we're trying to show you here are other ways that you can exploit trades even when there's a momentum move going on. You can also look to trade the extremes of those momentum moves. And basically trade the beginnings of the pullback. And that's ultimately what we're doing here. Okay, so again, thank you very much for watching. Happy Father's Day to all of you fathers out there. I hope you're having a lovely day and that your children are thoroughly spoiling you. Until next week, have a good day, good trading. Please give us a thumbs up beneath the video. Post any comments if you want to, and subscribe to the channel, because obviously if you subscribe to the channel, you get it directly to your inbox. You won't have to wait for our emails to come out to you to let you know that the video has been uploaded. Okay, so again, thank you very much. Have a good week and good trading.